might be able to stay home, brother.
I too like the music. Heads up to the DJ. Thank you very much. My name is Chris Brummer. I'm a law professor over at Georgetown University Law Center, and I'm the CEO of Bluprynt, a crypto disclosure company. And I am thrilled to talk to this panel on issues of that follow on to the last and deal with this question of market infrastructure and blockchains and what does that mean for everything from the changing regulatory and political environment. I'm going to have all of my panelists sort of introduce themselves with a sort of name, rank, serial number quickly, and then we can dive right into the subject.
So
Fernando.
I'm getting old. I forgot my serial number, so I'll keep it to my name. So I'm Fernando. I'm the CEO of SBI Digital Asset Holdings, which is part of the Japanese financial conglomerate SBI. And I would argue that we've been one of the main driving forces behind the mainstreaming of DLT and blockchain technology in finance. And we've done much of this work under the umbrella of the MAS created and sponsored Project Guardian. So I would like to thank the MAS for their foresight. When we started, it was one central bank, the MAS, and 3 private sector players, including us, and now it's 40 plus private sector players. And I think this MAS-led effort has spurred other regulators and central banks in Europe, Japan, and the US to follow suit. So I'll leave it at that. Prady.
Yeah, I'm Prady. At Temasek, I lead what is a bit of an unusual effort to try and play a catalyzing role when it comes to creation of new technologies and market infrastructure, which is obviously the topic today. We do believe that the world is going to see quite a shift in terms of some of these technologies and how infrastructure will relate to traditional systems as well as develop new systems. So we've been involved not just in building platforms like Partior, MarketNode, and others, but actually working closely with everyone on this panel and more broadly in industry to see how we can move forward the efforts.
Hi, everyone. My name is Sergey Nazarov. I'm a co-founder of Chainlink. It's a global standard for how to get data into, out of blockchains and how to connect chains with each other so that the transactions can work a secure, reliable, compliant way. So far, the system's enabled over $16 trillion in transaction value and is very widely adopted in DeFi and now becoming widely adopted in the capital markets.
Valérie.
So I'm Valérie. I am the CEO of Euroclear. Probably I'm the representative of the traditional financial market infrastructure, as we are managing 40 trillion of assets under custody, and we are settling the equivalent of 1 quadrillion of euros of transactions a year. But you will see, hopefully, through this panel that we can be a traditional financial market infrastructure, but really geared up towards innovation.
Well, you're already leading into the first question. I guess I'll start with you, Fernando, since you're right next to me. Mm-hmm. When you think about a sort of natively digital financial market infrastructure, there are lots of different kinds of challenges. SBI has been really at the forefront of trying to sort of bridge the gap into mainstream DLT, as you mentioned. What do you see as the primary challenges, and how is SBI orienting itself in terms of solving and addressing some of those challenges?
Yeah, absolutely. When we first started 4 years ago, we identified 2 major roadblocks. Actually, 2 different types of walled gardens. Most people, when talk about blockchain, they might tell you, oh, public blockchains are the way to go, or oh, no, that's too scary, I don't understand the governance, we need to have a private permission blockchain. So you end up with what we call a technical walled garden. But once, with the help of the likes of Sergey and Chainlink, you're able to breach, these, private ecosystems, then you end up finding that there are also regulatory walled gardens. You might be able to issue let's say, a bond natively in Japan. That stays within your technical walled garden first. Then with have Sergey and his team, we can bridge that between Japan and Singapore. But then you find out that the regulatory framework in Japan and in Singapore might be completely different. So technically, you can move things around. But then your partner in Singapore cannot book that. Then you're not allowed to even touch it, because the regulator sometimes not even the regulator, their own compliance team, risk management might not allow them to do that at all. So again, Sergey and my younger self might hate me for saying this, but in some cases it's not about the tech. I think that we can figure that out, but there is also this other walled garden, regulation. Right? Again, that's being a challenge for us because sort of the promise of digital assets, this cross-border, frictionless, yada, 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 that is true on the technical side, right? But you need to do that in a compliant manner. So our efforts has been on bridging those walled gardens globally.
I like this idea of a walled garden, and I love the fact that you're kind of made it a little bit more complicated than you usually think of. Sometimes you think of a walled garden as at the firm level with the company. You're sort of saying even within the company, you can have your sort of walled gardens, with your compliance team versus your legal team versus your BD, your business development, and then you also have the regulators, when you're trying to move and bridge things across borders. I want to get back to that question, but since Valérie, you mentioned about this innovation over in TradFi, I mean, the problem of certainly of regulatory borders is not a new one. I mean, how do you view the way in which companies respond to this challenge that Fernando is raising? And obviously, when you talk about DLT, when you talk about blockchain, when you talk about crypto or anything close to it, there's a certain regulatory velocity and asynchronous movement that keeps your compliance and your regulatory teams pretty busy. So how do you address that?
Being a financial market infrastructure which exists for 60 years almost, frankly, regulation has helped. I mean, regulation is something which is important to ensure that we are really, ensuring financial stability and investor protection. So, I mean, we have always lived in a very highly regulated environment, and at the same time, we have been created thanks to regulation. It's once we have, had quite a forward-looking legal framework established in the 60s that we have been able to develop the Eurobond market, which is now the third largest fixed income market in the world. So regulation is not bad. The regulation is something which is really bringing, stability, which is bringing trust. And in the financial world, I mean, everything turns around the word trust. Now, you're right that sometimes you could argue that, the weight of the regulation is too high and could sometimes even hamper some innovation. And this is where I see the world evolving. We have more and more now collaboration between financial market infrastructure like me, very regulated, which is bringing its ecosystem, which is bringing its guarantees, its trust, with more innovative companies like Chainlink, like MarketNode, where there we are really bringing the best of both worlds. We are bringing the strong, regulated, and security of the financial market infrastructure with the agility of these innovative companies. And I think this is definitely the way forward. And the fact that now we have more and more also public sector initiative to test DLT, I think it's a very good thing, because then we are starting to see as well how to regulate going forward in a fit for purpose, not over-regulate, because otherwise you kill innovation, but at the same time you need sufficient regulation to continue to establish the trust in the financial markets.
So, because Prady said, I can just throw anything at him at any point in time, which is really dangerous to say to a law professor. But what I'm hearing from Valérie is a very important and interesting point. And just to sort of break that down, regulation can introduce frictions, particularly when you're working across borders. Yep. What I've found interesting is that when you talk about digital assets in general, even writing the rules from a legal standpoint can be hard, because even within industry, you have terms of art sometimes instead of sort of very concrete concepts. So regulation can be helpful to the extent to which it takes sort of a term of art that's, decentralization, whatever that means, whatever, right? And it tries to create a certain precision into that term for the purposes of defining what are acceptable or impermissible conduct. Now, that kind of a standardization can actually be, in and of itself, kind of helpful, because now everybody is sort of on the same page and you're using the same words or the same concepts. But obviously, when every country is coming to its own conclusion as to how to define those sort of fuzzy concepts, it can then introduce a brand new layer of complexity, and you may end up with as much ambiguity, or even more so than you did when you started off. So how are you going to solve that? No. When you think about how do you balance, operational efficiency and at the same time addressing the kinds of challenges that traditionally a regulator wants to address, I mean, are there steps by which one would both analyze, assess, and ultimately execute that process?
Yeah, so I'll put it in two broad buckets here. There's the technology layer, and then there's the business layer. I mean, it's deeply interlinked, but I think we tend to conflate the two. What we've seen is parts of the industry run far ahead on technology. Mm-hmm. Historically, that's not been a problem because it's a development of a new technology, but you now have a financialization of the technology, right? So I think it's unique. It's for the first time we are mixing, in effect, two very distinct buckets, right? So that poses with it a whole new set of challenges where regulation is evolving. Yeah, I mean, natural reactions would be strong from either side. But what I will come back to on the topic here, on financial market infrastructure, at least our experience of not just investing, but being involved with some of the builders of these platforms as partnerships or where we're directly involved, is regulation is a constraint, but that's not the biggest factor. Workflows have been established over several decades. There are systems of record keeping which have been established over several decades. I think the bigger thing which everyone is grappling with and making changes to is really modernizing business and entire systems and workflows. So I always say this, and I say this every year, digitization before tokenization. We talk about Web 2, Web 3. Luckily, the concept of Web 5 didn't catch on before we are done with Web 2 and Web 3. But if you look at many of the workflows in the context of financial market infrastructure, they're not truly digital. So when we talk about application of AI now in this context, you need to have it in more and more digital native formats. Now, but to more directly address your question though, we do find that in many instances, regulators are still figuring out, mainly through sandboxes, right? So Singapore is doing a fantastic job, obviously. Hong Kong is doing a great job, a number of jurisdictions in the Middle East in particular. So, and of course, our colleagues and partners in Europe, even the States, as much as critiquing happenings of different jurisdictions. Brazil actually would call them out, right? It's fantastic. I know there are a few colleagues now from Brazil here this time. It's fantastic work that's happening in LATAM. So I think really where we are is there's a very sharp focus now on business case, ROI, what are we doing for end customers, what does it take to integrate legacy systems, value that you deliver. And in parallel, obviously, there are some constraints from regulation, but they're good because you do need to have clear guardrails. And I always, again, give this example of don't take out fences which you don't know why they were put there in the first place. Once you know why they were put there, and then if you take it out, then you at least have the right sort of fences. So it is a long-run process, but definitely seeing progress on a year-by-year basis. But the key now is all the FIs we work with are razor sharp, no longer asking why. They're more saying, help us with the business case, right? Help us with the business case. And I think regulators are cooperating to the best that they can. And then, of course, we have amazing technologists like Sergey who are working hard on the technology layers, which can then further accelerate that. Yeah.
Can I was literally going to go to you for that.
I
wanted to have
I could feel your...
I was tugging on you because I want to...
Yeah. So I couldn't agree more that the focus has been on the business side for quite a while. And one could also argue that DLT and blockchain is not actually disruptive. It's part of the digitization of finance that started in the 60s with mainframes, right? So it's part of evolution. Even in traditional and TradFi, for lack of a better term, we've been able to do distribution of financial products cross-border. And the issue that we can do that is that we have a very clear taxonomy of the different asset classes. And even in places where you have common law in Japan, which doesn't, it is safe for a Japanese investor to buy something issued out of the UK, because there is precedent that has already been built over many decades. But the challenge that I myself, as the CEO of SBI Digital Asset Holdings, have is that I want to do the issuance or do the sourcing of the product from a country where the regulations are very clear. In some cases, going to common law country is not an option, because there might be an regulation by enforcement. And so the buy side is scared about that, right? And doesn't meet the suitability requirements, right? Because you never know. There might be enforcement in the UK, and then something that we issued we cannot keep selling anymore, right? So I'll do thank Sarah from the FCA, who was telling me that they're working on mapping out this taxonomy across different countries. So you can operationalize different corridors. Maybe you can do UK, Singapore, Japan, Japan, Switzerland, you name it. And we need to do all of that end to end. Eventually, common law countries like UK, will build a track record with the help of the likes of us and other like-minded partners. And that will give a lot of assurance to everyone else, right? But then on the tech side, I think on the business side, we need to do a better job at defining those requirements, putting this taxonomy in writing, right? So that the likes of Sergey can help us figure out the technical side of things, right? And come up with the technical risk management guidelines that, we need to apply to convince our, risk management, our boards, or the CFOs, CTOs, you name it, to deploy things like this in production.
So what I really love about this conversation as well as is concentrating and thinking about what those workflows look like. I really never, we're as a lawyer, we're lower level species of humans. So when you look at actual regulatory mandates, very often regulators respond to what they see in the market. They kind of cherry pick the things that they kind of like, and then they create like a little bit of a regulatory regime. So sometimes workflows are implicitly kind of embedded in regulation. And then technology can come around, kind of shake things up a little bit, and certainly in the United States, there's been this question about, what's the proper regulatory approach, to blockchain-based assets and workflows. But it's a little bit hard because you kind of have to peek behind the regulation to see what the assumptions are of the regulation, and then you have to reform and change those rules. And so it's this give and take, and listening to even behind all of that is that workflow is a really useful observation that I'll have to really keep in mind. Sergey, it seems like everyone's just sort of building up towards you, as a kind of climax here. How do you view then? I guess I'm gonna call it TradFi and BlockFi. How do you view that as ultimately evolving? Both blockchain-based processes and obviously TradFi legacy systems.
Yeah, so I think we're at a very unique moment in time where there's a kind of once in a generation or two shift in how everything is going to work in the financial system. I think the first time this happened, you had the appearance of mainframes and core banking in the 60s and 70s, and so everything was forced to evolve from a legal and regulatory point of view to deal with the complexity of the appearance of mainframes, core banking, the digitization of finance in any form whatsoever. Then you had the internet appear, and that was the last big generational shift in how the financial system worked, because everyone got interconnected and everyone started transacting over the internet. Now we have a new set of technologies, blockchain, smart contracts, Oracle networks emerging, and they're forcing the need for clarity, right? They're forcing the need to clarify how a transaction works in this new blockchain format. How does that new transaction work? Because the blockchain format of the transaction is valuable. It has all these wonderful properties: speed, transparency, risk management. It's a superior format in many ways for how certain transactions work, and more transactions will work, which, as we heard from the panelists, there's demand for that, right? So that demand and the power of the technology is driving the need to create clarity on how to use the technology in a legally compliant way. And I think what the panelists, all the panelists have said, I really, really agree with. I think if you don't have the regulatory clarity that's necessary to do transactions, those transactions won't go past a certain point. I think there's definitely this kind of business layer and technology layer, and then the compliance layer is kind of in between those two places and needs to be taken account of. And I think there's very good existing systems that properly manage all of those problems very successfully. So in my view, the challenge is, how do you take the world's existing systems, like Euroclear and groups like SBI and Pradyumna, and how do you get them to all work together to make this transaction work well? And each of these groups brings something very valuable, whether it's a payment solution or whether it's the issuance of the asset or whether it's all of the compliance-related technology that's been developed over many decades that needs to be made reusable. So my approach and our approach in the Chainlink community to all this is to take that existing infrastructure and those existing standards, like SWIFT, like what's already been created over the last few decades, and see how they can be made compatible. And that compatibility is really the fastest way to get that transaction to work, right? And then Fernando's talking about a kind of compatibility of the legal world. And he's absolutely right that once you create legal clarity about how blockchain transactions should work, then you can instantiate that on chain using various technical systems and methods like Chainlink and CCIP and others, which we're very excited to get to that point. But until that exists, it's hard to formalize that in an on-chain form. So I think everyone here kind of really wants to work together to make that transaction work. And what's important is, from my point of view, the role I hope to play and our community hopes to play is providing the technology to weave all of that together into a functioning transaction, right? Including the highly regulated infrastructure, including the great group that makes the assets, including a great payment system, and just making it all work together. That, from my point of view, is the challenge that we're taking on, and solving that, I think, can accelerate how many of those transactions exist and how they go on to define our industry.
I would like to come back, to add on your point, also the point of Prady, because Euroclear, we are investing in the new technology, but it's not for the sake of investing in new technology. It's really to see how we can transform the market. Our role is very much to reduce the risk for the market, to improve the efficiency. And using the new technology, we are sure that we can do that, because today, as you rightly said, for decades, I think we have worked on standardization and automation, but there are still inefficiencies, and there are still a number of asset classes where we need to continue to improve the efficiency. There are also, cross-border transactions where we need also to continue to improve and reduce the risks. So I think I completely agree with both of you that using the new technologies, should lead us to build new business models, which would then transform the market and bring efficiency and reduce the risk. And this is in that spirit that we are collaborating together.
Can I add to that? Actually, I see the end game as the financial institutions being able to focus finally just on the financial function, like in the 50s before mainframes, and the financial institutions don't need to care about the IT side of things. These days, big banks have tens of thousands of engineers. They have data centers globally. Again, that started with the mainframes. People putting the payment rails on a ledger, securities also in a ledger. In the 80s, there was this transition to open architecture systems. Then in the 90s, you had the internet. And all of a sudden, banks were not only running huge IT teams, but also issuing credentials for, internet users, you name it. And then cloud computing came, and some of these data centers started to be, dropped, and people started to have contracts with AWS, Amazon, you name it. And something broke, at least had a contractual relationship with the cloud provider, right? But now with blockchain, you don't even need to have an account with the cloud provider. This universal computer that with the right smart contract would allow a developer to have access to payment rails to implement a settlement function for a new financial product, right? Whatever that is, right? So one would argue that in the future, if we get the governance of this global computer right, the banks can finally, just like in the 50s, focus just on the financial function, right? Because there's this magic, global computer that will take care of things. Of course, banks cannot sue Ethereum, right? you cannot have a contractual relationship with such an entity, which means that FIs will need to be involved in the governance of all of that. I see the role as the guys with the gray hair, like Prady and I, to come up with the requirements for the financial primitives that we need to implement in this universal computer. What should a primitive for payments look like? What are the risk controls that we need to build around these financial primitives? So again, I don't think that's up to the tech guys. It's us on the business side, and regulators, and yes, also lawyers. We love you guys to come up with the requirements to get this right.
So I love because you've now also made a little bit of a transition from this general concept of efficiency into sort of practical sort of areas for both opportunity, and I think we'll continue that. I mean, Prady, when you think about your return on investment, and you're already starting to hear this from Fernando in terms of where maybe some of those returns are going to be highest, some of those greatest opportunities in some of these primitives. Like, where do you see them to be?
Yeah. So, if we think of it from a capital allocator's lens, and I come back to just what does the future of financial market infrastructure look like, right? So, we have established pieces. What's interesting is I'll give two sets of parameters and a bit of a framework around this, right? Is firstly, referencing back to technology business aspects of it, a little bit of this concept of permissioned versus permissionless, right? Which I know you wanted me to touch upon very briefly, but technology choices will be made by any number of either a single market participant or a platform or a network that's coming, right? Interestingly, in our conversations, when you go to domestic systems, we're seeing a tendency more and more towards centralized systems. It's really cross-border, where there is a natural need for having trustless technologies, right? I think there's a real need for some sort of technological innovation. But within that itself, again, one should not confuse what technology choices get made and how does a proof of a transaction, right? So the immutability aspect of it, not for the sake of any philosophical reasons, but actually just with the hash proving that a transaction happened, right? Versus actually flows being permissioned, right? And I think whether it's Chainlink or whether it's any other technology partner that we speak to, I think there's a wide acceptance that the flows will be permissioned, right? So I think therefore it flows from there as to how you look at these things, right? You could argue that the technologies that are being developed are actually more resilient, simply because when something is decentralized from a pure technological lens, it by definition will be more resilient to be tested, deployed at scale, of course, right? But that has nothing to do with the need for permission flow. So just as a first construct, right, if you put it there. Second is, I don't think we've spoken about this, and people don't talk enough about this, is because we get stuck at the crypto discussion or the technology layer discussion, is decentralization of financial market infrastructure. When I try to explain party or to people, they always think there's a central counterparty, like a CLS, in between. But it takes a lot of effort to explain to people, no, actually the FIs are directly transacting and interacting on software that's getting deployed in their environment. So if you look at the future of financial market infrastructure, there'll be more and more instances. To us, that's fundamental transformation. And there's a number of these efforts globally that are beginning to spawn, right? Supported by a number of people. So even when we partner with institutions like Euroclear who are really forward-looking, people go like, oh, does that mean traditional financial market infrastructure goes away? The answer is no. It does not sort of go away. So from an investment lens, it's that transformation which you find interesting at both layers.
Quickly, Sergey, and then I have maybe the hardest question for Valérie at the very end for our finale, but where do you see sort of the greatest opportunities then between the sort of smart contract deployment and financial institutions today in terms of making that leap and that transition?
I think tokenized funds have this year really kicked off a new race for adoption of digital asset technology in the capital markets. I think historically the buy side is a very strong force in setting standards and setting adoption for any technological trend in the capital markets. And in this case, you have the asset management industry with folks like BlackRock, Fidelity, other very, very large asset managers successfully launching tokenized funds live in production, some of which we work with and power and enable. I think once the buy side starts to really move towards a trend or a technology in the capital markets, that is the point at which everyone else receives a very strong signal that says, time to figure out how you're going to service your customer. And all commercial enterprises are here to service their customer, right? You can really look at the rest of the financial industry as a group of infrastructures, counterparties that service the asset managers and the underlying asset owners. That's how I view it. So the fact that this year, the buy side, the asset management industry, in the form of its biggest participants, has decided to make production products, and that those production products are performing well, and that those production products are injecting various critical information into them, that those production products work across chains. This is kind of a very, very, very strong trend that I don't think is to be underestimated, and it's very different from the previous few years of what the trend was that was driving this, which was more around experimentation and efficiency and various other categories. So I think we're really going to be seeing an acceleration of that because we work with many of the best tokenized funds and together with SBI with some of the best asset managers in the world. And so I believe that that trend will only accelerate from here, and the fundamental economic force of that trend cannot be underestimated.
I'd like to elaborate on something that Prady hinted at, you don't mind, Chris. I think for those financial institutions who want to be part of the next phase of digitization, there needs to be a change in mindset. A lot of financial institutions thought about IT in the context of a IT vendor client relationship, right? And here, the mindset has to be one where you're actually an active part of the governance. You cannot just simply blame someone else. So some people are not able to make that switch, right? From, oh, I just manage vendors. Even those big banks that have, big IT companies, they call them the CTV guys, right? They change the bank guys. And you know what I mean, those who work at big banks, right? So eventually, in finally, we start talking about IT vendors, right? Oh, we are active part of the governance, right? I think that's the big leap that needs to happen, right? On a certain.
Well, now you're getting into my world, governance. I mean, I can tell you about that stuff.
Please.
But Valérie, I was going to. This has been such a positive, optimistic, forward-looking conversation. But you started your comments about, and my first question to you was about bridging these different regulatory sort of worlds and different regulatory terrains. You may have noticed, but there are some geopolitical tensions in the world, and that in turn can impact. How regulation goes into production. How have you traditionally viewed that challenge, and do you have any sense as to how one should navigate the immediate future in this space when you're thinking about all these efficiency gains?
I will make the distinction between, on one side, the regulation, and on the other side, the geopolitical context, if you allow me. On the regulations side, we are covering 50 markets, so we have had to deal with 50 different regulations, basically. And I think we have a long track record of adapting to that, and I think it works, because when we're talking about centralization or decentralization, I mean, the history of Euroclear has always been to bridge, if you wish, the different legal regime, the different regulatory regime. So I'm not too worried about the regulatory, divergence, or it requires some adaptation, agility, some, investments. But I think we know how to deal with that. I think the geopolitical context is different, because there, you have a lot more uncertainty, because a regulation is a rule-based framework. A geopolitical context, you don't have any rules, or you're moving away from the rule-based framework. And so I think here, again, is by, at the end of the day, being very purpose-driven and client-centric, and really trying to do the right thing for the market, while complying, of course, with the law, but trying to do in a transparent way what is good for the market. And given the situation we are in, you're right that we are evolving in Euroclear, in the sense that in the past we were often building ourselves a solution or bringing the solution to the different markets. Now what we are doing is more, working with local partners, because I think that the day that somebody could impose his view is long gone, and we therefore need, on the contrary, to find the right partners. And that's exactly what we are doing, here in Singapore with the new relationship with Temasek around the market node is very much to say, okay, we want to be part of the local market infrastructure. We can bring our savoir-faire, our experience, but we do it in a local context. And I think that's the way forward.
That is the way forward, and we will move ourselves forwardly off the stage. I want to say thank you to this wonderful panel. I learned a lot. So let's give them a hand and to say thank you. Okay.
Once again,